Okay, so is the third largest cryptocurrency in the world at risk of collapsing? That seems to be the question on everyone's mind as we look at Tether, also known as USDT. And today we're going to talk about three core critiques that people have against Tether, and then go into a little bit more detail about whether you, as a normal cryptocurrency trader or investor, should be concerned about USDT. First, a lack of overall transparency in regard to their reserves. Secondly, centralization and trust issues. And third, the risk of being subjected to new financial regulations. Before we start, make sure to just give us a quick thumbs up. First off, let's answer, what is USDT? So Tether has issued USDT, which is a stable coin pegged to the US dollar. So one USDT, one token, is always going to remain equivalent to one US dollar. Now, this stable coin is backed by a large reserve of assets that Tether, the parent company, owns. Now, something to note is that Tether is actually owned by another company called Bitfinex, which is the same company, they're based out of Hong Kong, the same company that owns Bitfinex, a popular cryptocurrency exchange. Now, when we look at USDT, this is actually the third largest cryptocurrency in the world behind Bitcoin and Ethereum. When measuring market cap, their estimated market cap is around $75 billion. When we compare that to other stable coins, for example, the second most popular USDC, they're only at about 50 billion in market cap. So let's take a quick look at a comparison between USDT and then USDC so that we can kind of see where they rank and also where they differ as well. According to these stats, USDT has about a $36 billion trading volume in comparison to USDC, which is only about 2.7 billion. The most important thing to note here is the difference in their backing. So like I mentioned, USDT has a treasury, and that backing, their vaults or reserves, are used to ensure that the stablecoin does not depeg. When we look at USDT, their reserves are mostly assets of equivalent value, so assets that can be converted to fiat currency, assets that hold that value, but are not directly cash on hand. That is really different in comparison to USDC, which has mostly cash and cash equivalents on hand. This is actually one of the major critiques of Tether itself. One of the things to note here is that Tether is actually pretty reserved when it comes to breaking down their reserves. The last time they disclosed what was actually held in their vault, we learned that their cash assets on hand made up only about 4.2 billion of their total reserves, their total assets, whereas the vast majority of their reserves, about 34 billion, consisted of unidentified treasury bills, and an additional 24 billion was held in commercial paper. Not having a way to assess the healthiness or, overall wellness of their reserves is a little bit of a concern, right? Critics say that you can't have full confidence if we cannot accurately assess or conduct an audit on their reserves. On the flip side of that, Tether has undergone multiple attacks and attempts to depeg its stablecoin. And so being able to provide that information out there would just give bad actors in the cryptocurrency space some ammunition or information on how to better target Tether's reserves and therefore create a depeg situation. So let's talk a little bit about the centralization aspect now. For a large portion of cryptocurrency related financial organizations, Tether has become the de facto reserve, and so a lot of these firms have actually relied on Tether's stability as opposed to actually having cash on hand or fiat currency reserves. And an important thing to note is that Tether is not a decentralized blockchain. Since Tether is a smart contract, the developers and the mechanism by which they maintain their peg relies on the ability to freeze and also mint new supply to Tether. This is something that we see across stablecoins, but that centralization aspect again does remain a concern, especially when we see such large financial institutions relying on this stablecoin as if it was fully decentralized. It's simply a transport layer that creates efficiency in transacting and also storing value. With this centralization concern, we also see regulatory concern come into play as well, especially because of the fact that it can be considered a security. In late 2021, the CFTC, or Commodity Futures Trading Commission, actually issued a $41 million fine to Tether and also its parent company. In considering this fine, one of the things we actually see is pretty concerning, and it's a fact that as a result of the investigation, they found that Tether relied upon unregulated entities and certain third parties to hold funds compromising the reserves. Additionally, they commingled reserve funds with Bitfinex's operational and customer funds. So the treasury that's supposed to support Tether, that's supposed to support USDT, is actually used for Bitfinex's operational funds as well. Something that should not be happening, especially when we're, again, talking about a stablecoin with a $75 billion market cap. Another thing to note here is that the order found Tether and Bitfinex's combined assets also included funds held by third parties, including at least 29 arrangements that were not documented through an agreement or a contract. Additionally, Tether transferred Tether reserve funds to Bitfinex to help Bitfinex when responding to a liquidity crisis. Let's talk about that liquidity crisis real quick. In 2016, Bitfinex was actually hacked, and 120,000 Bitcoin were stolen from the exchange. So when we see that Bitfinex as a cryptocurrency exchange is not only subject to the same types of hacks that many other exchanges are, and something that is a continuing issue in regards to security on the blockchain, but when we see that combined with the fact that Tether is willing to loan or commingle their reserve funds, it does again raise some valid criticism that critics are talking about. Ironically, in 2021, when Tether was being investigated by the US DOJ, these stolen Bitcoins were found, or at least most of them, and the US government is the only entity with access. They recovered 94,000 Bitcoins from the Bitfinex hack. So what happens from here? Well, when we take a look at all of the concerns that critics have raised recently, especially in light of the overall sentiment shift towards stablecoins, in light of the Luna disaster, we tend to see some valid criticism. Tether right now is in a very tricky spot where it is subject to upcoming regulations, right? The SEC can at any time determine Tether's ability to continue operating within the US. So essentially the question is, how long until the US financial authorities determine that Tether is operating outside of current restrictions and they crack down on this company and also the parent company? And if they restrict trading in the US, what kind of implications would that have for Tether's ability to not only maintain its volume, maintain its ability to peg to the US dollar, but also maintain its cash reserves? With all of that being said, in light of the recent market downturns, Tether has actually been able to maintain their peg, maintain stability, and survive, pretty much without issue. So it's really an interesting thing to see whether these critics are valid. Overall, it seems that Tether is not going anywhere yet. If you made it this far into the video, I just wanted to say thanks for watching. Make sure to like and subscribe for more crypto content and other updates in the crypto markets.